So one thing that I've learned about how people manage their finances in the year that is rounding up 2025 is that people pay too much attention on the tiny details that in the grand scheme of things doesn't matter. A lot of time is spent on how much did I spend in the last month, in the last year? How much did I spend on coffee? How much did I spend on eating out? How much did I spend on drink, clubbing, all these tiny details? But what people don't know is that these fine details have little to no benefit to you achieving your goal, which, if I may assume, is financial freedom. So, how do CFOs, the people in charge the number of a business, for example, how do they look at finance? I mean, if you can understand how they look at finance from their perspective, then maybe that will help you also in managing your finances better. I mean, if what you are earning per month is, say, 2000 USD, there is no point in you trying to track everywhere that a dollar goes. Because what is the upside to that? Let's say you manage it so well, you track it so well, you manage to save the entire 2000 USD. Where will that take you in your quest to achieve financial freedom? It doesn't take you anywhere. And why this is a big problem is because a lot of time is spent on tracking every single cent of yours. Time that can be otherwise be put into something more productive. You are having to make a decision every time, every single time. That's is a huge challenge. I don't know how you manage that. So, how do CFOs seize money? They don't look back every single time looking at what happened, how much goes here, how much goes where, how much did we spend on this. What they look at is they've created a bucket where where their finances is supposed to go, where the money is supposed to go. For you, when we put it in personal terms, it can be your living expenses. How much do you have to spend? Uh, so, how much needs to go to your living expenses, right? How much needs to go to your savings and investment, and how much should go to in your fund bucket? And lastly, how much should go to your emergencies, right? So a CFO, if they want to manage your personal finance, they are not going to, I mean, they are going to ask for your bank statement to establish the trend on what you spend money on, how much you spend on something. But they are not going to spend forever there because they are busy looking into the bigger picture. Because in the bigger picture, that is where your time is worth spent. The future, the projection to maximize on opportunities and to minimize on risks. So here's what I'm saying. If you have decided that your living expenses should be 50% of your income and you are able to invest 20% of your income and 15% of it should go to your fund and 15% of it should go to your emergencies, that is your buffer, then every month you have no concern looking at your past expenses because the only thing that matters is that you need to keep your living expenses at a maximum of 50% of your income. Likewise, you need to keep your investment at the maximum of 15%, sorry, 20%, right? And then your fun, if you want to have fun, if you want to have night out, all those things, travel, 15% is what you're targeting. And also your buffer should be 15%. What this means is that you can set up automated transfer from a bank account to another bank account. Okay, this bank account is for my savings and investment, and this bank account is for my buffer emergencies, and then this account is for my living expenses. and this account is for fun. You can combine the fun and living expense for all I care. The moment you see that your account that holds your living expenses and your buffer, sorry, and your fun expenses, then you know that you are running red, you are running out of money. And you have made a decision that under no circumstances am I going to touch what is in my savings and investing account. And also, under no circumstances will I touch something that is in my emergency account, except if it is an actual emergency. And you also need to predefine emergencies. Emergency shouldn't be someone just call you that they are out of money, you should quickly borrow them something. That is not your emergency. That is their emergency. If you still have money in your living expense, you can sacrifice that for that. But actual emergencies, you will know where you see them because nobody will tell you. All right. So if you look at money like this, your decision become one-time decision. You just decide on when exactly is your income coming in and where are they coming from? What is the total? Then you decide the percentages. Then you set up your automatic bank transfer. And every month you are sleeping like a child. Because as long as you know that I have made the decision at the beginning of the year, there's no need for me to panic. I already set aside the amount that I'm supposed to invest. I already set aside the amount to emergency. So you don't need to be checking how much did I spend? How much did I spend on that coffee? How much discount are they offering somewhere? And the space that you freed up in your head, you can then use it to think of how to grow your salary, to think of the bigger things, to think of where else can I get my can I get more income from? How can I scale up? So I just decided to put this out there so that as we're beginning 2026, you can manage and plan your finances better. And I really, really hope that you put it into action in this new year. If you have any specific question to ask me about setting this up, you can drop a comment in the comment section below. And to see whenever I upload a content like this, you can please click subscribe. And also, if you have a friend that's their finances seem messy and it stresses them a lot, you can refer them to this channel. Thank you.